This is Daryl for Wednesday the 14th of December 2016. This is the DE Stock Market Summary. We want to thank everyone out there in social media that have been supporting us and giving us all our feedback. We thank you so much out there on LinkedIn. So, today the markets are down, which is a big surprise from how the markets have been for the last number of weeks. We've been breaking records. Yesterday we hit a new high on the Dow Jones. We went very close to 20,000. So major, I think we had about 11 different highs or historical numbers that we have hit this year since we have had the elections. So the market's been very good for investors. But today was a reversal in that. Why did we have the markets reversing us today? This is the reason why. The Federal Reserve today met and they made an announcement on the rate hike. And they decided to raise rates, which was not a surprise. The markets actually priced in a rate hike. So then what was the issue? Why do we have the market stumbling today? This is the reason why. So the Federal Reserve raised interest rates by a quarter of a point today. And by the biggest, I guess, surprise to the markets, and has the markets reacting so negatively, is because the Fed signaled that they could have faster, more rate hikes than was expected next year. So this all comes at the President-elect Donald Trump, who will be sworn in next month. He made a number of promises that has been creating the major positive activity in the market, right? He's going to have, he's be cutting rates, he'd be increasing spending in infrastructure. So these are the many things that he'll be doing. And so the central bank policymakers now are shifting their outlook. They are going to have an outlook of faster growth. Before, it was an outlook, before the election, of a slower growth in the economy, especially because of oil prices that was really dragging the economy along. And so they were looking at about one rate hike next year. But that quickly changed after the elections. The market has just been going on full steam. Now they're thinking we'll have inflation very soon, if these things were to really happen, if they're really to cut their taxes, and if they have major spending in infrastructure, there would be less unemployment. So there'll be more people working, there'll be more people putting money into the economy and really creating inflation. So the Fed is now saying we're gonna have three rate hikes next year, 2017. So that was a big jump for the markets. The markets wasn't really expecting that. It's a major surprise, and so that is why stocks are down today. So it wasn't the surprise that there would be a rate hike, because it was all priced in since earlier in the year, since summertime. The Fed was suggesting, strongly suggesting, that we will have a rate hike this year, and it really pointed forward to December. And I've been saying it here that really we're going to have a rate hike in December. So everyone knew there was going to be a rate hike, but we did not know that they intended now to have 3 hikes next year. So that's the major surprise for the market, and so the market turned red today. Okay, so what did we have? We had the Dow Jones down 138.4 points to 19,773.17. So the volume was up earlier in the day. It was closer to 19,800, but 19,800, but now it's at 19,773. The S&P 500 is down 22.29 points to 2249.43. Yes, so as we were saying, the Nasdaq is down 36.18 points to 5427.67. So all in all, it was a pretty bad one. So it's not a close right now, but we really predicted it will close negative today, because it was just such a surprise to the markets, the announcements from the Fed, Janet Yellen. Tomorrow, there's a possibility that we could turn to positive, but we might be still feeling the effects of this surprise to the market today. Okay, but stay tuned. This is Daryl for the DE Stock Market Summary. We will be back again next week to really give a summary of the markets. Okay, so again, this is Daryl for the DE Stock Market Summary. You have a good day. Bye-bye.